Hello, everyone. Thanks for joining and welcome back. Our guest today is Keith Weiner, founder and CEO of Monetary Metals. Welcome back, Keith.
Hey, thanks for having me, Ivan.
Yeah, thank you so much for coming down. I wanted to get you down to talk about, so many things that's happening right now in the markets and, of course, in precious metals. My first question to you, Keith, is, with global debt levels at all-time highs, what do you see as the end game if current trends continue?
I think the first thing that needs to be said is that global debt levels are always at all-time highs, except if we have a little wave of default, which the central banks then get ahead of and stop, because the debt grows exponentially. That's what it does under irredeemable currency. That's what it's been doing since 1971. It keeps growing. It seems to double about every 8 years, and maybe accelerating. We'll see. Um, I'm sorry, that was the first half of your question. Second half of your question, what do I see as the end game?
Yeah.
Um, I want to talk about it in real terms, and then I want to talk about what I think happens mechanically in the monetary system. In real terms, we are perversely incentivizing. I hate the term unintended consequences because it puts the focus on the alleged intentions of the politicians. It says, well, their intentions are good, which isn't necessarily the case. But unfortunately, this was unforeseeable and unintended, which is also not necessarily the case. As an economist, I tend to focus on incentives and whether incentives are, good incentives, wholesome incentives, or perverse incentives.
Hmm.
So, perverse incentive is something that encourages somebody to do something that's destructive, but it's profitable. And so we have had, since 1981, a falling interest rate. I am fully aware that Powell is on his abortive attempt to hike rates coming back down now. Trump wants rates even lower. He wants them back to zero again. Trump will get his way in the end, partly because I think he will force the issue, partly because interest rates want to go back to zero and beyond anyways, and Trump is simply with the trend. A falling interest rate means rising asset prices.
Right.
Asset prices are inverse to interest rates. So if interest rates are cut in half, asset prices, at least the ones with perpetual cash flows like equities and real estate, double. So every time asset prices double, people are getting capital gains. A bull market, this is an endless bull market, is wonderful fun because everybody can throw a dart at buy almost anything. It goes up, you sell it, you have gains. The problem is, this is a mechanism, this is a machine for conversion, and I'm very well aware that the term conversion in legal circles has an implication of an illicit taking, a process of conversion of one party's wealth into another party's income. What do I mean by that? Suppose you have $100,000 of your hard-earned savings that you've spent years and years and years accumulating by consuming less than you produce. That's how one accumulates capital.
Right.
And you go and buy a thing, we'll call it bit asset, just to keep it devoid of, keep it neutral from any asset I may or may not pick on from time to time on Twitter. So bit asset, you buy $100,000 worth. Why do you do that? Because you think it's going to go up. And so you're giving $100,000 of your hard-earned savings to a guy who's exiting. And what is he going to do? Well, he has a certain amount of cost that he put into it. He'll take his capital back plus some return on it, continue to invest that, but some of that he's going to consume.
Right.
He's going to eat and drink and be merry, buy clothing, buy Ferraris, whatever it is he's going to do with it. And that is a consumption of capital. He is consuming your life savings. But you're okay with that because as long as the price of bit asset is going up, you think you're going to get your capital back.
Right.
It's not strictly true. Your capital is done. Your capital is gone. It's been consumed. It's been dissipated when this guy went to Las Vegas and played around with Ferraris or whatever it is he did in Las Vegas. What happens in Vegas stays in Vegas, right? So we don't know what he did, but he spent it, and it's consumed. Now, you will be perfectly happy if bit asset goes up to $200,000. You will then let's say, sell it, and now you get your $100,000 back, plus let's say a 10% return. And so now you have $110,000 worth of capital you're going to keep investing, and $90,000 you're going to consume.
Hmm.
And so on and so on and so on. But you're consuming, it comes to you as income. This is the thing that's so deadly about it. To you, it looks like income. You made money. But to the guy who forked over his life savings of $200,000, that's his life savings, that's his capital.
Right.
So every time asset prices are going up, which they've been doing relentlessly since 1981, it fools people. It creates this, fog or this illusion that makes it feel like everyone's getting income, but actually they're getting someone else's capital. Now, unfortunately, the capital is actually needed, and we have a very advanced industrial civilization that has managed, among many other things, to produce food and energy at a huge industrial scale. Much, 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 much greater than what could have been done, let's say, in Roman times, as organized as they were, as great as their engineering was, crop irrigation, leveling fields, all the stuff they were able to do. We are much, much more efficient at it because we have diesel, which means we have power, we have insecticides, we have fertilizers, which
Right.
they didn't have. So we're consuming that capital on which our civilization rests. And eventually, assuming that when we're creating new capital too, but assuming that the rate of consumption of capital is greater than the rate of creation of new capital, then eventually something falls. And there's a very real thing. If the capital isn't there, you can't produce the food, you can't produce the energy, something very real breaks. Somebody's not going to eat. Somebody's not going to heat their house. Somebody's not going to be able to drive the truck delivering the food, to the cities, and something very real will break, and that will be, calamity. In terms of financial mechanism, I've written about gold backwardation and what happens when that becomes permanent.
Right.
So backwardation is when gold in the spot market is at a higher price than gold in the futures market, which should not occur because there is a risk-free, as the conventional system defines it, arbitrage, which is you can sell your physical gold, have cash, park that cash, and at the same time buy a future and get the same gold back, plus you pocket some profit,
Right.
for doing that. Um, and the fact that gold backwardation occurred in fall of 2008, gives you a pretty strong hint that the reason why it occurred is distrust in the counterparty. The counterparty wouldn't be good to deliver your gold back.
Right.
And so, and it's recurred intermittently. Recently, we had a massive silver backwardation a month or two ago, which also shouldn't happen because there's, huge, almost unlimited stocks of gold and silver. There's no shortage, and so the fact that there's a shortage to the market, it's a shortage of trust, not a shortage of the commodity. So when gold backwardation becomes permanent, what that's saying is that gold is no longer bidding on the dollar. Very dangerous thing because there is a huge asymmetry here. That is, while gold owners may no longer be desirous of dollars, dollar owners will certainly be desirous of gold. And if
Right.
they can't buy gold directly, then what are they going to do? They're going to buy some other commodity because gold will bid on oil, it's just not bidding on dollars anymore.
Mm-hmm.
So they buy oil, they bid up oil in dollar terms, dump it on the gold bid. So in dollar terms, oil is going up. In gold terms, oil is going down. And that process will continue until it doesn't work anymore because the price of oil has been driven essentially to infinity in dollar terms. That will be called hyperinflation. Everybody will blame the quantity of dollars. That won't be the cause of it, but that's what everybody will assume. That's the mainstream theory. And everybody will agree, and rightfully so, stick a fork in it, the dollar is done.
Mm-hmm.
So now imagine everybody waking up tomorrow morning. It's not just that your bank account's worthless, but so is your employer's bank account worthless, and so is your grocery store's bank account worthless, and so is the power company's bank account being worthless.
Right.
How are we going to get out of that mess? Um, it's a mess. And with that kind of mess comes breakdown in civil order. The cops aren't being paid. People are desperate. They're hungry. What do desperate, hungry people do? I think we can all imagine what that looks like. So, at a financial level, that's what it looks like. At a mechanical level, it's a breakdown of the ability to continue to produce because the capital has been consumed.
Mm-hmm. It would be
So
pure chaos.
yeah, it'll be a very, very bad environment. And I think if it's not rectified and we don't change course, that is what 476 AD, that's our 476 AD moment,
Wow.
collapse of civilization. So I don't like to dwell on that too much, but I certainly want people to understand like that's what's at stake if we don't change monetary course. And it's not a matter of everyone getting into the casino and betting on the gold price going up. It doesn't matter. Gold could go to 5,000, 10,000, 100,000, whatever. Bitcoin could go to 100,000, a million, a billion. It doesn't matter. That doesn't fix the problem. In fact, that's only part of the problem. People are
Right.
using gold or Bitcoin as a means to get the wealth of somebody else forked over to them as income so they can consume it. It's
Wow.
actually exacerbating it. It's actually participating in it. Anyways, one thing that has to be said at the end of a conversation like this, I don't blame the players of the game. I blame the Fed for forcing everybody to play the game.
So, hello, my fellow silver and gold stackers. Please hit the like and subscribe button. It will really help the silver and gold community grow. It'll help this channel grow, and I'd really appreciate it. Back to the video. So, how do you fix that, Keith? Or is there no fix to this?
There is a fix, and that is we have to begin the remonetization, and we have to begin the process of gold and silver, but especially gold, to begin circulating again. And
Hmm.
the key to that is to return a rate of interest to gold, which is what will draw gold into the market. So I'm writing a chapter for an academic textbook on kind of the future monetary system. And I'm making the point that, look, I think it's gold. If you think it's Bitcoin, if someone else thinks it's banana peels or cowrie shells or whatever it is, it has to be capable of earning interest. And that's the only thing that will draw it into the market.
Right.
Otherwise, look at what the Bitcoiners say in their own words. They are dying to find the next even bigger balance sheet to buy a massive amount of Bitcoin and take it off the market and lock it up for decades. So they have all this, 21 million in theory Bitcoin floating around there. Number one, they're super excited whenever they think the keys to a wallet has been lost. So they want to constantly decrease the float, decrease the float, decrease the float. They want the U.S. Government or Federal Reserve to buy massive amounts. They want the other central banks. They want to take it all off market. And so then the tiny, tiny, tiny remnant of Bitcoin that still trades as float, the price will go up to $1 billion or whatever. Okay, if you want to speculate on its price, that's great. If you
Hmm.
want to actually see it circulate as a medium of exchange, as a unit of account, as a numeraire, as a means of borrowing and lending and financing businesses, as a means of savings that people can get a return, a real yield on it. None of this, those are polar opposites. Either you want to see it all get locked away or you want to see it come to market. My view is whether it's Bitcoin or gold or cowrie shells, you want to see it come into market.
Right.
And the only thing that will draw it into market is interest. Interest is the key to the whole thing. And this is an academic, textbook. This isn't me. Yes, you could say Keith is talking in his book. I am talking in my book, but the reason why this is my book, the economic theory came first, and then I said, let me build a business to do this, rather than, oh, I happen to be in this business, now let me cast about for rationalizations to sell. Okay, you should be my customer because of, and then make up rationalizations sort of
Right.
post hoc. No, no, this is why I'm in this business in the first place, is to bring gold back into circulation. And if we can do that, we can avert this whole disaster.
Yeah.
Um, we'll see. I don't know. I remember hearing a anecdote or an analogy, I guess, or one of those thought experiments. Imagine that you watch your wife is a mile away from you and she's about to walk over the edge of a cliff, which she isn't aware of or whatever. And you're a mile away.
Hmm.
You shout at the top of your lungs, but she can't hear you, and you start running, not with necessarily any guarantee you're going to get there before she gets over the edge of the cliff, but simply because you can't not try. It's your wife.
Right.
You
No,
have to
that totally
try,
makes
and
sense.
and you may not succeed, but you're going to try.
Yeah.
And that's how I feel about what we're trying to do. Is hopefully now the good thing is we're on an exponential trend. The good thing is Silicon Valley has taught the world about how to build business models with relatively small amounts of capital that can
Hmm.
change the world. It's Archimedes saying, I can move the world if you give me a long enough lever and you let me choose where to put the fulcrum. I can move the world.
Wow.
That's
Yeah,
that's how we
no.
try to avert it.
No,
That's
that's
it.
that's a great analogy. Keith, I wanted to ask you too, what does the Middle East or Eastern countries understand about gold and how to use it, and precious metals compared to us here in the West?
You know, some of it is they have greater sophistication, and we're working on getting somebody on our podcast that can talk about how things work in Turkey. They're doing things with gold that I tried to make an argument. So there's a bunch of free market economists that were involved in one of these free zones where they can set up a different set of laws, regulations, and taxes, and all that, in kind of a third world country. And I made the case that you should allow businesses to make an election that their books and therefore taxes should be based on gold as the numeraire rather than dollars or whatever numeraire.
Right.
And because if suppose you have 100 ounces of gold capital, and you're in the shoe business, so every day you're buying shoes for gold, and then you're selling shoes to retail customers for gold, and
Right.
so you're trading back and forth, back and forth, back and forth. During which time the gold price doubles. So if you have to pay taxes on the gain in dollars that you have, because you've been buying and selling the gold constantly, all the gold is turned over multiple times, you're going to pay gold essentially. And so at the end of the year, you end with 105 ounces of gold capital. My argument is you should be taxed on the 5 ounces of gain, not on, you've doubled the value in dollar terms just because the price went up. These are free market economists. They're not lay people, and they're economists, not just like random libertarians. They didn't understand the argument. It's not that they disagreed with me. It's that it didn't register because they didn't get it.
Right.
And meanwhile, in Turkey, they're doing this exact thing. And so they're a lot more sophisticated in gold. Is the good news. The bad news is because they've been forced to be because their governments are not trustworthy and their currencies are toilet paper. I
Hmm.
mean, if you go to India, the currency goes down pretty reliably against the dollar, like 8% a year is the sort of average rate of decline. It's not like the dollar is going up, mind you. Dollar is
Right.
falling, but the rupee is falling against the dollar by 8%. And in Turkey, it's anybody's guess, but it can be 20%, it can be 100%. They may have imminent hyperinflation. And so they have a more sophisticated understanding of gold. Gold is part of every household's plan for savings. They do think about getting yield on it. They think about all kinds of things that Americans, I think, are starting to be ready for, but are behind the curve relative to other parts of the world because of necessity. I
Yeah.
mean, in America, we live in this incredible bubble of our own making, have never had a currency crisis. And, the closest thing we ever had to a currency crisis was the inflation of the late 1970s.
Hmm.
I'm old enough to remember that I was 12 years old in 1979. And, I remember inflation was 12%, 13%, whatever. If you went to the rest of the world and said, we had a currency, almost had a currency crisis. Oh, yeah, what was your inflation rate? 12%. They'd be like, oh, per week? No, per year. Oh, 12% per year? You think that's a currency crisis? That's cute.
Right.
Because they'd have that per day, in some cases. I mean, so, we've had it pretty good in America. The currency has been pretty trustworthy. It has been capable of being a vehicle for savings with problems, and now inflation rates are higher and people are more conscious of it. But it's
Yeah.
worked tolerably okay. It's not perfect. It's not ideal. There are problems in it. I don't want anybody watching this to think, oh, that guy, he's an advocate of the dollar. I'm certainly not. I'm an advocate that you should have your savings in gold.
Yeah.
But the dollars work. You got to understand the problem. If you want to fix the problem, you got to understand it, and don't overstate the problem. Don't overstate the symptoms, or you just lose all your credibility. If
Hmm.
if, if the words "worthless fiat dollar" flow glibly from your mouth, then you're making a mistake. The dollar is not worthless. It can buy food. It can buy fuel. It can buy gold. It will eventually become worthless, but do not underestimate the amount of energy it takes to prove that this will be true versus taking it for granted today. And anyways, the dollar has worked tolerably for Americans in this capacity, even as savings. And so Americans don't get gold. They understand gold the least of any culture, in my opinion. I say that as an American who's traveled quite a bit and
Yeah.
talked to people about gold. That's what I do. But they're coming to it because the dollar is in decline. It's not what it was. This is not your father's dollar, let alone your grandfather's dollar, let alone a gold-backed dollar, pre 1971 or certainly pre 1933. That's not the dollar today.
Hmm.
But it's still holding together. It's still working okay. Americans, many of them, most of them are still like, well, this gold thing, I don't know. Is it going to go up? That's what they want to know. They're thinking of it as a speculation. Okay, if I bet on gold, will it go up? And one of the things the Bitcoiners, when Bitcoin is rising, they're very gleeful about it's much better than gold.
Yeah.
I say, well, it depends on better at what. I'm sorry, Bitcoin is obviously superior to gold at skyrocketing, also crashing, but we don't have to talk about that too much. Um, Bitcoin's now had a minus 30%. Just sort of casual, yeah, we just lost 30%, whatever. And everyone in the Bitcoin world is like, yeah, whatever. A 30% drawdown, man. I debated Pierre Rochard at the Soho Forum. They invited me to have this debate. And, on stage, he was saying that it's savings. I said, well, to be savings, that means it's suitable for everybody. He said, yes. I said, even octogenarian widows with no further income potential in her life, this is suitable. Yeah, absolutely. So I said, what would you say to an octogenarian widow who's put her life savings into Bitcoin and it had a 79% drawdown, which
Right.
actually had occurred in the months leading up to that particular debate? That's what actually happened.
What did he
What
say?
would you say to her? And so he said, buy more.
Oh
And
man.
so now this is Cambridge House rules for debate, right? I had my final thing. He was in his final rebuttal. I'm not allowed to say anything else. I'm sitting there on the stage. Gene Epstein is the moderator. He's sitting to my right,
Right.
and I'm supposed to sit quietly, not saying anything. When he said buy more, I just kind of mimed to the audience. I'm like, and Gene is like, you're not allowed to say anything. Sorry, I didn't say anything. I was just miming,
Oh,
silently. I think there were several moments. So Pierre lost the debate by landslide, and I think there are several moments when he really lost. But man, that had to be a leading one.
oh,
That's
that's
not a good
crazy.
answer.
No, that's not a
Yeah.
good answer whatsoever. No, that's
And so,
really bad.
look, if you're a millennial, and you have a 30-year time horizon, most of your income potential is ahead of you, and you happen to buy Bitcoin at 60, what was it, 7,000, 69,000 at the time, and it fell to 13,000, and number one, you have the time to wait for it to recover, and number two, you have the certainty born of zeal that you believe it absolutely will recover. Of course, there's no guarantees, and markets don't work like that, but you have that belief, that certainty, that zealousness, and you have the time. Okay, you bought a 69, you would have rather bought at 13 a couple of months later, but okay, and obviously it went and recovered, almost doubled, it hit 120, it's 126 a couple of months ago to 125.
Hmm.
So obviously you were made whole and you say, that's fine. Okay, but the concept of drawdown matters, especially to people that aren't millennials with a 30-year time horizon. And
Yeah.
octogenarian widow is one of them. She every month has to buy groceries, which means she has to sell the Bitcoin that she paid, bought in at $69,000. She had to sell it at 13,000 to buy groceries, which means locking in her losses, and there is no recovery for her.
No, that's
And she's going
horrible.
to consume her savings at a much faster clip, obviously, at $13,000 versus 69,000. And so the concept of a drawdown is unacceptable to somebody in that position, and the Bitcoin millennials don't quite grasp that.
Most people think the only way you can profit from gold is when the price goes up. But what if you can earn a yield on gold paid in gold without ever even selling an ounce of gold? Instead of you paying to store your gold, you can now get paid to own it. Monetary Metals offers gold owners a chance to earn a yield on gold paid in gold up to 4% in physical ounces. That means you can accumulate more gold ounces in your account, not paper promises. Unlike dollar yields that can be slashed or go negative, a gold yield is completely different. It's a real return that has been measured and trusted for the past 5,000 years. Thousands of clients have trusted Monetary Metals to help their portfolio and help their wealth grow in gold. Join the community of investors earning a yield in physical gold annually with Monetary Metals. Click the link in the description below for Monetary Metals to find out more. Yeah, no, that's a great question that you asked him because that's such a fair question. And if you're just saying to buy more, especially at that big of a drawdown, that's insanity.
Well, and also the other thing that's insane is I said, suppose she put all of her savings, she put 100% of her life savings into Bitcoin, buy more. With what? She doesn't
Yeah,
have any
she
more.
doesn't
It's
have any more
already
savings.
100% all in.
Yeah. No, that's absolutely crazy. Well, Keith, I want to thank you so much for coming down. What a fantastic conversation we've had today. Like really, it was It was really eye-opening, especially with the analogy you put out there. I want people to connect with you. I want them to follow your guys' work. I'll put the links in the description below, but where can they find you?
Our website is monetary-metals.com. We pay interest on gold, currently 4% per annum in gold. If you give me 100 ounces of gold at the end of the year, I'll give you back 104. And on Twitter, I'm at real Keith Weiner.
Yeah, no, I really appreciate it. Everyone watching this, highly recommend go follow Keith on his social. I'll put the link in the description below. Follow Monetary Metals. Go check out their work. But Keith, thank you so much for today. What a great conversation.
Thanks for having me.
Talk to you soon.
Bye bye.